Follow the money, where compliance is most enforced. As we begin Chapter 6, we move into one of the most scrutinized areas of Arizona real estate law, compensation. While previous chapters focused on supervision, documentation, and operations, this chapter addresses how money flows through the brokerage and whether that flow complies with the law. Compensation is where many violations occur because it directly involves financial benefit. ADRI pays close attention to who gets paid, how they get paid, and whether that payment structure complies with Arizona statutes. Under ARS, paragraph 32-2155, compensation for real estate services is strictly regulated. The law is clear. Only properly licensed individuals may receive compensation, and that compensation must flow through the employing broker. This section builds on Chapter 5. Once agents are properly licensed and supervised, the next step is ensuring they are paid correctly. Paying only licensed individuals, the core rule. The foundation of compensation compliance is simple. Only licensed individuals may be paid for real estate activity. This means a person must hold an active real estate license. The license must be affiliated with the paying broker. The activity performed must fall within licensed real estate services. For example, an agent in Chandler successfully closes a transaction and earns a commission. That commission can only be paid if the agent's license is active at the time of payment and properly affiliated with the brokerage. A common violation occurs when an agent's license expires before closing, an agent transfers brokerages mid-transaction, an unlicensed individual expects payment for participation. In each of these scenarios, payment becomes legally restricted. Under ARS, paragraph 32-2155, paying an unlicensed individual for real estate services is a direct violation and may result in disciplinary action under ARS, paragraph 32-2153. A critical takeaway: if the license is not active and affiliated, the payment cannot be made. Restrictions on LLCs, corporations, and PCs who can receive payment. One of the most misunderstood areas of compensation compliance involves business entities such as LLCs, corporations, and professional corporations, PCs. In Arizona, compensation must be paid to a licensed individual or a licensed entity. The entity must be properly structured and authorized to receive compensation. The payment must still flow through the broker. For example, an agent in Scottsdale wants their commission paid to their LLC for tax purposes. This is only permissible if the LLC is properly registered. The broker approves the arrangement. The payment still complies with ADRI rules. A major risk arises when agents attempt to bypass the broker by directing payment to an entity outside of the brokerage structure. This is not allowed. The key principle: the broker controls the flow of compensation, regardless of how the agent structures their business. Failure to follow these rules can result in violations under ARS, paragraph 32-2155, and create serious compliance issues during an audit. Compensation flow through broker. No direct payments. Arizona law requires that all compensation for real estate services flow through the employing broker. This means agents cannot be paid directly by clients. Agents cannot accept payment outside the brokerage. All commissions must be processed through the broker. For example, a buyer offers to pay an agent directly for helping with a transaction. Even if both parties agree, this is a violation. The payment must go through the broker. Another example involves referral fees. If an agent in Mesa refers a client to another agent, any referral compensation must be paid broker to broker, not directly between agents. This requirement ensures transparency in transactions. Proper accounting and record keeping. Broker oversight of all financial activity. Under AAC, R4 281103, the broker is responsible for supervising all brokerage activities, including compensation. A key takeaway: if the broker does not process the payment, it is likely a violation. Violations under ARS, paragraph 32-2155, where brokers get disciplined. Compensation violations are among the most common reasons for disciplinary action in Arizona real estate. Common violations include paying unlicensed individuals, paying agents with inactive licenses, allowing direct payments outside the brokerage, improperly structuring payments to entities, failure to maintain records of compensation. For example, a brokerage in Phoenix allows an unlicensed assistant to receive a bonus based on a closed transaction. Even if labeled differently, this is still compensation for real estate activity and is prohibited. Another example involves an agent receiving payment directly from a client for consulting services related to a transaction. This bypasses the broker and violates the law. Under ARS, paragraph 32(2153), these violations may result in fines, license suspension, license revocation, additional education requirements. The seriousness of compensation violations cannot be overstated. They go directly to the integrity of the real estate industry. Bringing it all together. Compensation compliance is about control, transparency, and legality. Every dollar earned in a transaction must be accounted for and processed in accordance with Arizona law. This section reinforces several key principles. Only licensed individuals may be paid. Compensation must flow through the broker. Entities must be properly structured and approved. Violations can result in significant discipline. As we move into the next section, we will examine employment agreements and independent contractor relationships, further defining how agents operate within the brokerage structure.